What's up YouTube? Dougie Chong here. Welcome to today's episode where I'll be talking about how to invest in a bear market. It's been a very long time since I posted. I've been a bit busy. Don't worry, I'm not wiped out of the market or anything like that. I do feel a bit bad as this is the most important time to be posting educational videos about financial education, and you'll find out more as this video progresses. But basically, since about 2008, the market has been in a huge constant bull market. That means stocks have just been steadily rising year over year. And that means all stocks were going up. So it wasn't a matter if you were making money or not. It was whether you were going up 5% or 10%. Or even higher than that. I'll add a disclaimer that when COVID-19 hit, sometime in 2020, there was a flash crash. Lasted for maybe a month, but that doesn't really count in my opinion. So 2008 was a very long time ago. I hadn't even started investing yet, but I did read up a lot about it, and there's even a video about how the big housing bubble collapsed in the US and caused the great economic crash in 2008. You can watch the movie, it's called The Big Short, and while everyone else was losing money, one investor named Michael Burry actually was able to guess the market correctly and made a lot of money from it. So in this video, I'll be talking about how to invest in a bear market, then I'll talk about the few moves that I have made so far, and last but not least, I'll say how long I think this bear market will last in my opinion. Again, this is just my opinion, and it is not legal financial advice. First off, I'll start by defining exactly what a bear market is. On Investopedia.com, it's a drop of about 20% from a recent peak in a given market. This market can be crypto, commodities, anything really, but for our purposes, let's include the S&P 500 index. I'll use the stock ticker VFV. It's collected of the top 500 companies in the US by market cap. Recently, it hit highs of about $109, and it's been as low as about $83 very recently. I'm not going to do the exact math, but I think that amounts to a little over 20% of a drop. So why is the number 20% so significant? Well, it's not really. It's just an arbitrary percentage that someone came up with, but it does mark a pretty steep decrease in prices. Let's say you had $1,000 invested, it would actually only be $800 after such a drop. So what should you do in a bear market? Well, to start things off, I'll say what you should not do. You should not sell any stocks. Selling stocks low is one of the worst things you can do, and one of the main reasons why people lose money in the stock market. It's very easy to buy and play the stock market when things are going up, everything's good, you're making money, maybe not as much as your friends or your neighbor, but you'll make some money. But when everything's going down and psychologically you just see your account go lower and lower, it's very hard not to sell. Granted, not every company is going to make it out of this recession alive. I personally have two companies in very good food stock and Hive stock that I don't really see coming out of this unscathed. But as long as your portfolio is diversified across a number of different industries like banking, mining, real estate, etc., and a lot of your money is in big blue chip profitable companies, then you should be fine to hold for the long term. And I know it's hard seeing your account go down thousands and thousands of dollars day after day. You'll feel stupid for holding on to all these stocks when the main reason you're investing is to make money, but trust me, this is the right move to do. And you might be thinking to yourself, oh, I'm smart, I'll just sell everything now and buy it back when it goes a little bit cheaper. The problem with this theory or this plan is that it'll go down cheaper, maybe 5-10%, but at that point you're gonna get greedy. You're gonna maybe just wanna wait a few more percentages, 11-12% down, and then you're gonna see it slowly creep up, and then you're gonna wish you got in at that lower point and keep waiting and waiting and waiting. Then it's gonna be like 1 or 2% down from what you initially sold for, and at that point you're just gonna wait a little bit longer. Then it's gonna be up 5 or 10% from when you sold, and you're gonna feel foolish for selling in the first place. And then before you know it, it's up 20%. You're in a huge bull run, and you missed your opportunity to buy it back. That is why whatever you do, you should not sell in a bear market. There are a few circumstances where maybe you need some money for a down payment or a car or something like that, but try wherever you can, just do not sell if possible. The absolute best thing you can do right now is to buy stocks. I would buy in blue chip, profitable companies, things like Google, Walmart, companies that have made a lot of money in the past. This is a once in a generation type opportunity to get very good companies at very low prices. For all of you that were waiting, kind of scared to get into the market, now is an excellent time to start investing. And as always, I would recommend dollar cost averaging. Don't buy everything at once, just slowly start buying, maybe once a month or so. Now I will tell you some of the recent moves that I did. I did buy some VFE up at around $107, $102, and then later around $93 and $87. So those later buys were pretty decent, but those upper buys are still kind of hurting me a bit right now. And even though I said not to sell stocks, I did sell all of my Tesla shares and Nvidia shares a little bit earlier, and then rebought about half of them not too long ago. I did this in my TFSA account, so no capital gains tax was triggered, and also it's only about 10 to 15% of my total portfolio. So even if the market started to recover, everything started to go up and up and up, I wouldn't be too concerned. Other than that, it's been pretty quiet. I try not to log into my account that much. If it's out of sight, it's out of mind, and I won't be tempted to sell. I'll definitely say that I haven't been buying as much as I should be, but if VFE goes back lower, maybe below $80, I'll definitely be looking to buy a lot more heavy. This slight recent uptick is actually a good time to try to sell some of your portfolio and buy it back later. But again, don't go selling your whole portfolio, just as much as you are willing to lose and never see a good buyback opportunity again. Now for the fortune teller part of the video, where I try to predict how long this bear market is gonna last and fail miserably. We could very well have already bottomed, but I think that is very unlikely. The average bear market lasts between 1 and 3 years, and I expect to see these low prices well into next summer. The main reason I think this is because inflation has got out of hand and interest rates are absolutely skyrocketing. The other thing is a lot of companies were seeing profit boost and revenue boost from stimulus money that was coming in, and now that that's all gone, they're coming back to reality now. Of course, there's no way to know exactly how long this bear market will last, so just continue to invest steadily, and science says the economy will eventually recover. That's it for this video, guys. Thanks a lot for watching. Enjoy the rest of your day, and let me know in the comments below, what do you guys think is happening with the market, and when do you think it will recover? Thanks again, and see you in the next video.